Eric Mwadhi, Mwadhi.com. Let's take a look at an Indian stock here that is a good example of what we should always be on the lookout for, and it is how a stock is responding to either being above or below 38.2 on the monthly RSI. So generally speaking, whenever we are trying to find quality breakouts, is trying to find stocks whose monthly RSI is moving to 3-year highs. So we want the RSI to be breaking out to 3-year highs, and we also want the MACDs, at least one of the MACDs, to move to 3-year highs. So that's the minimum requirement. Now, even though that is true, I just want to sensitize you to the idea that stocks whose monthly RSI are trading below 38.2 can be a little bit of a trap. So be aware. Try and stay away from stocks whose monthly RSI is below 38.2, because they tend to go back to their bearish ways if they cannot break out above 38.2. This is a perfect example. If you draw a line around that 38.2 level, it so happens to be somewhere around here. So until the stock can move above 38.2, in my opinion, one can avoid owning this type of instrument. As a perfect example, take a look at what happened here when the stock struggled to move above 38.2 during this period at about 900, 950 there, in that range. Eventually it would go on to trade as low as 150. The reason being that it failed to move and hold above this 38.2 level. If you take a look at all data monthly, you'll also notice that once the stock broke down here below 38.2, that level has been a problem. So the breakdown here below 38.2 was a major sell. That was sometime in 2013 here above 1100. It became resistance here again for the highs right there at 900, which we discussed, and also coming back to show resistance here in the current market. So until the stock can move above that 38.2 level, you have to be aware that generally this is going to be where the stock is going to struggle. In fact, if we zoom in and take a look at a closer picture, again we see that break. So this break below 38.2 has not been kind to the stock, and one needs to avoid this until it can move above 38.2. Stocks that trade in that general area below 38.2 can be avoided. And keep in mind that the best time when a stock is moving higher is when it is trading above 50. As you can see here, this period here corresponds nicely to the period when the stock was trading above 50 on its monthly RSI. So clearly we can see that we are better off finding instruments whose RSI is trading above 50, and stay away from ideas whose RSI is trading below 38.2, because stocks tend to go back to their bearish ways. Eric Mwadhi, Mwadhi.com. As always, good luck, peace, and blessings. ESC.